Assalamualaikum warahmatullah. Welcome back to our program. Our program today will be looking at one important question here. Is the Islamic banking business suitable for the application of al-bay' over riba? So this is something that we need to look into seriously, because we know that when the Quran prescribes al-bay' over riba, it implies that the practice of al-bay' need to be evidence or need to be visible somewhere. Where is it that we can see the prevalence of riba? And of course, the only place that we know is the bank. So the banking firm or the banking company is the entity that is involved in money lending with riba. And that would be, for example, in the deposit market, they will try to acquire deposits from the people, and this deposit product will be issued, such as current account, saving, and fixed deposit. And the bank will say, pay 3% per annum for every dollar of deposit they acquire from the people. So, for example, if you have 100 billion worth of deposit at 3% per annum, and therefore the cost of the deposit is seen here in the income statement at 3 billion, right? So when the bank takes deposit, it means that the bank is taking a loan from the depositors. So the bank is now the borrowing party, the depositors are the lending party, and the bank pays the depositors 3% per annum. So for a deposit of 100 billion, then the interest expense or the cost of deposit is 3 billion. And then the bank will use the deposit fund to make a loan, let's say at the same amount of 100 billion, and charges the borrowing party a loan rate of 10% per annum. So that would be, at 10% per annum, the revenue generated would be 10 billion. That would be 100 billion multiplied by 10%. So interest revenue will be at 10 billion. The interest expense will be 3 billion. And therefore the gross earning for the bank will be 7 billion. And then we will look at two most important expense items. And that will be the overhead expenditure. So this is basically the money spent by the bank to pay salary and bonuses and to pay for the office supplies and all those items that need to be there to run the bank. So overhead expenses, let's say, is 1 billion, which is charged to the earning of 7 billion. Another very important expense item is the loan loss provision. So the bank need to make some kind of a preparation in case some of this loan, 100 billion worth of loan, get into trouble, or there is a default event. So that default event need to be forecasted, need to be predicted. And let's say the bank think that the amount of defaults from the 100 billion will be 4 billion. So the bank uses some, modality to estimate the what we call expected losses. So the expected losses were basically estimated at 4 billion, and this 4 billion is charged to the gross earning, and therefore we can see that the net earning for the bank after deducting overhead expenditure and provisioning for loan loss is 2 billion. And if there is no dividend payout, then the capital will increase from 10 billion to 12 billion. So that will be very good news for the shareholders, where they will experience capital appreciation. So that will only be possible if the loans, are well enough for the bank to collect the debt over time. However, if the prediction, if the estimation of the expected loss is not good enough, so meaning that there is a financial crisis or there is some internal problem at the bank level where the default occur in a huge amount beyond the amount of the provision. Let's say now, due to the big default event, higher than expected, the provision need to be raised from 4 billion to 8 billion, for example, double the amount. So now we have 8 billion plus 1 billion, which is 9 billion, and 7 billion minus 9 billion, then the earning will be a loss. There's no earning, but a loss to the bank of 2 billion. And this 2 billion need to be absorbed by capital. So the role of capital is to absorb what we call unexpected losses. And that is 2 billion. And capital will depreciate from 10 billion to 8 billion. So we can see here that the role of capital is not to make loan. The role of capital is to absorb what we call unexpected losses. So that is why it is very important, meaning that despite the fact that the bank make a loan and able to generate 10 billion worth of revenues, but that is only when we assume that all of the loans are performing. And if there is a weak oversight, at the bank level where quite a number of the loans are turning bad and the default event is occurring in a huge amount, then this is where banking must be able to see that the business of banking is not just about marketing and selling loans, and the business of banking is about risk management. We must make sure that the risk in the loan must be identified, it must be measured, it must be mitigated before the bank offer the loan to the prospecting customer. So this is, in general, the kind of operation taking place in banks, and how that can be applied in Islamic banking, where we will use al-bay' instead of loan. This is a very tricky thing. Inshallah, we can discuss further in the next video. So please do not forget to comment, to share, and to subscribe. I will see you again. Assalamu alaikum.